Welcome to the Alcandross International Trading Podcast, or AIT podcast. This is your host, owner, and director of Alcandross International Trading, Konstantin Alcandross. Today we're going to cover a article, recent, it's a couple of days old. Again, guys, I'm trying to catch up. Don't worry, I'll get there. I'll get to some more recent stuff eventually as I start to kind of get this routine more down pat. But anyway. It's another articles from Reuters. Reuters has a lot of good articles, and that's why I like to look at Reuters. So the title for this one is "Dollar Firm, Yuan Slides After China Unexpectedly Cuts Rates." Story by Bridget Riley and Kevin Buckland. So this is from Tokyo Reuters. The safe haven dollar stayed firm against major peers while the yuan sank to a 9-month trough after China's central bank unexpectedly cut key policy rates for a second time in 3 months on Tuesday to shore up the country's sputtering economy. The yuan weakened as far as 77.3115 per dollar for the first time since November 4th in offshore trading before bouncing back as major state-owned banks were seen selling dollars to support their local currency. The dollar index, which measures the currency against 6 major peers, including the euro and yen, was about flat at 103.13 after hitting a one and a half month high at 103.46 on Monday, buoyed by demand for the safest assets following a spate of disappointing Chinese economic indicators. Chinese data on industrial output and retail sales released shortly after the PBOC's rate cut also fell short of economists' forecasts. The Australian dollar, which often acts as a proxy trade on China, dipped as much as 0.039% to 64.63 cents, but failed to breach Monday's 9-month low of 64.54. It last sat at 13% weaker at 64.79. In addition to the burden from China's economic troubles, minutes from the Reserve Bank of Australia's latest meeting released on Tuesday suggested local rates may have already peaked, while soft wages growth also bolstered the case for a pause. We're fast approaching a phase where bets will be on for another round of stimulus in China, Matt Simpson, senior market analyst at City Index, said. There is a floor under the Aussie dollar, and any rumors of stimulus could light the bullish match for these markets to bounce. Elsewhere, the U.S. dollar pushed to a fresh 9-month high of 145.60 yen before retreating to be down 0.09% after at 145.435. Traders are looking for any signs of intervention after the dollar surge above 145 last autumn triggered the first yen buying intervention in a generation. And that's it for that article. Now, the reason I'm covering this is because the currency markets and financial markets have an effect on international trade. I've mentioned this before, and I'll probably continue mentioning this in subsequent editions because it's important. Currency and the financial markets do have an effect on international trade. So basically, the takeaway from this is that with the yuan declining in value means that that Chinese importers are going to have to fork out more money to import products from overseas. So, for example, if the yuan is much further from, if you're getting less U.S. dollars per yuan, it means you have to fork out. It means it's going to cost you more yuan to get, say, 1 ton of chicken products or 1 ton of corn products. That 1 ton is going to cost you more now because your dollar's been devalued. So I think, again, I've said this before, what we're seeing here is with the sort of the deindustrialization of China occurring, and which has been occurring the last couple of years due to COVID and other factors. With less economic activity comes a devaluation of the dollar. Or not the dollar, but the currency. And with less people working in China, it means there's less people who have money, which means less people can buy stuff. So if there are less people buying things, it means your retail sector is not making enough money either. So that puts pressure on them as well. So I'm not surprised by this. I've kind of predicted this was going to, I've been sort of thinking to myself that this was going to come sooner or later. And I think, we're seeing it now. China's starting to strain now, which is no surprise, and they've only got themselves to blame. They decided to they've made it increasingly difficult for companies to operate within China. So naturally, business is going to go elsewhere, and business flight's going to go elsewhere. And with that, you're going to see. So basically, let's break it down, right? So if a company leaves China, say Apple, who has, I don't know, 10,000 Chinese workers, right? Decides to say, all right, we're going to move to India. So now 10,000 people are unemployed, temporarily maybe, some maybe permanently, depending on how easy it is, how quickly they can get back into employment in China. But if you have a whole bunch of companies leaving, right, you've got mass unemployment. Those people aren't going to be working. Now, I don't know whether China's got a welfare system. I'm assuming they've probably got a welfare state, right? Well, suddenly now, those companies aren't building certain things. Those companies so say Apple leaves, right? Now you've got the import. Now you've got the first people taking a hit are the importers in China who would have been importing raw materials for these factories. So they're not making money now because there's no demand for their product in China. Or as much, maybe. Maybe they still are making money. Maybe they still have other people they can sell to. But they're going to lose a huge portion of money because there's no one to sell to. There's not as many people sell. Those big companies that would hire a lot of people are not going to be buying their raw material. So they're going to get hit. Less money for them, which means less purchasing power for them. And also the people who are unemployed, less purchasing power. And so... And also the banks. The banks don't have as many depositors now. Or they're not getting as many deposits as they were before. So the banks, it has a domino effect, right? So with less deposits in yuan, your banks, if your banks aren't getting deposits, right, in yuan, that means the yuan is weaker. It's supply and demand, right? If there's not a demand for, not a demand, it's not as simple as that. But let's say there's not as much of a supply of something, or as much of a need for yuans now because people are unemployed now. Your banks have less deposits, that devalues the currency. So this is maybe where you read these articles where you've got Chinese banks buying up U.S. dollars. Maybe it's kind of the concept of that. And also the other thing too, as well. With unemployment, like I said, with less money, that's less spending money for people, which means both the retailer outlets, whether it be fashion outlets, food outlets, they're making less money. So, and if they make less money, again, they still, that will put a strain on them to survive. So, and I think this is really a result of I think it's all a result of really what we're seeing with the the exodus of foreign companies in China, manufacturers going offshore, going to India. I think we're going to see just more and more of these type of articles, honestly, in the near future. And if anything, they'll probably get it'll probably get even more dire eventually. I've been sort of saying within my own sort of circle of other, business contacts that and other business leaders here that I think China's headed towards potentially civil war is not the word, but I could see within maybe 10 years, 5 to 10 years maybe, if the Chinese economy continues to strain with manufacturing flight. If there's no large major manufacturers in China, then you're going to have a lot of unemployed people. And I think that's going to cause a lot of civil unrest. So I could see a situation where China maybe breaks up into, different countries, basically. I mean, China's history has been one of not just empire, but it's also gone through phases where China's been one country and then it's separated. I think the Warring States is an example of this, where China was divided into three warring states, three different countries within China. I believe it was the north, and then you had some kingdom in the sort of the coast, and then a sort of southwestern kingdom. So I could see China going back, kind of breaking up and going that direction. I think Hong Kong would be the first place to break apart, would be to break away from China if there was any kind of massive, major financial economic crisis in China. So I think that's very possible. There's actually another article here by Reuters, which came out just 22 hours ago. Why is China not rushing to fix its ailing economy? That's actually quite interesting, which I might... If it's not too long, maybe I'll just go through this, because this is actually quite interesting. It's fairly long, actually. Yeah, actually, let's look at this one. I was actually going to leave this, end it there, but I think we'll actually look at this one too, because this is quite interesting. So, analysis. Why is China not rushing to fix its ailing economy? Story by Lori Chen and Yu Lun Tian, 22 hours old. Beijing Reuters. With China at risk of tipping into prolonged stagnation and a spiraling property crisis threatening financial stability, there is growing unease over why its leaders are not rushing to revive the world's second largest economy. Even in a country known for opaque and drawn-out decision-making, investors, analysts, and diplomats are pointing to signs that Beijing seems to hesitant to deliver the bold policies needed to prop up an ailing post-COVID recovery. This is not just an economic problem, but a geopolitical one. U.S. President Joe Biden at loggerheads with China over hot-button issues like Taiwan, the democratic island Beijing claims as its own. Last week called China a ticking time bomb due to its economic ills. That's not good, because when bad folks have problems, they do bad things, Biden said. Yeah, well, all right. I mean, he might be right about it. He's not wrong about that. It's just the way he delivers that. Such a country bumpkin, the way he sounds. So why has China's response been so tepid? The view of several China watchers is that President Xi Jinping's focus on national security is restricting and working counter to the economic effort, scaring off the money Beijing says it's seeking to attract. Well, no shit, Sherlock. What have I been saying on this podcast? You know, I haven't been doing it that long, but I've been saying this on this podcast ever since I've started, and not just that. I've been saying this privately to other people in business or contacts all over the world. It's not just me saying this. I've got people privately who I talk to and communicate with who tell me the same thing. China's just too difficult to deal with. Yeah, everything's drawn out, takes too long, too many decision makers, too much bureaucracy. Well, no shit. This is why businesses throw their hands up and say, well, we're going to India. Don't have the same problem there. So, I mean, you look at India, I mean, on a microeconomic level, I mean, you have street vendors everywhere. I don't know whether or not you need a license to sell food on the street. If you've ever seen those videos in India of street vendors. But my gut feeling is probably not, because pretty much any Tom, Dick, and Harry is selling street food in India. So, whereas you come here to Australia, forget it, you're paying like $1,000 a week or I think it's $1,000 a week or $1,000 a month. You're paying an arm and a leg to be a street food vendor. So, India doesn't have the same issues that China does, because you don't have a communist party which is intent on controlling people in control, basically. You know, Indians are very live and let live, you know, and this is why you have so many different religious groups in India, you know. Whereas in China, I mean, I don't believe there is as much religious freedom there. So, you know, not much freedom in general in China. So hence you've got these problems, because they bleed into the economic sphere as well. So the view of several China watchers is okay. So we've said that the core problem this year is that the leadership has given vague, high-level instructions for officials to balance economic development against national security, said Christopher Better, Deputy Director of China Research at Gavekal Dragonomics. Geez, what a name. If officials are unsure what the leadership wants them to do, they're likely to put off any action until they receive more information. The result is policy paralysis, even if that comes at a substantial cost. So basically, yeah, this is kind of what happens, again, in a communist regime. If you screw up, you get punished badly. So again, this also reinforces This also reinforces. This is also another factor that delays doing business and makes it very slow and time-consuming doing business with China. Just simply because people are, officials in that country are too afraid to do anything, or people are too afraid to make decisions because if they make the wrong decisions, off with their head. So I think this is also, just fear is also partly what makes it difficult doing business in China. The fear on their part. Others say the Communist Party's ingrained hesitancy towards measures that could shift power from the state to the private sector in a government stacked with Xi's loyalists may be stifling the policy debate and stymieing the response. To be sure, change in China can take time, as demonstrated by its insistence on maintaining economically damaging COVID-19 restrictions through most of last year, even as the rest of the world opened up. China has shown timely resolve in the past, responding comprehensively to stem growth worries during the 2008-2009 global financial crisis and a capital outflow scare in 2015. Major policy changes often also heavily choreographed with a December economic meeting, usually the venue to formulate such resolutions. Economists say China needs measures to boost consumption and business confidence, such as tax cuts or government-funded consumption vouchers, but add that unlike previous slowdowns, there is no quick fix. China has hit back at criticism of its response. A small number of Western politicians and media amplify and hype up the temporary problems existing in China's economic recovery. Foreign Ministry spokesman Wang Wenbin told media on Wednesday. Yeah, that's what they like to think. As usual with authoritarian regimes, they're usually blinded by their own, bullshit, because that's usually what they have to spread is bullshit in order for them to control their masses. So that's fine. It's only going to hurt them in the long run. So they will eventually be slapped in the face by reality. He said, "Okay, all right." Wang's comments came after weak economic activity data on Tuesday fueled concern that China is headed for a deeper, longer slowdown. Perception gap. The government has also suspended publishing data on youth unemployment, which has hit record highs in what analysts say is partly a symptom of regulatory crackdowns on big employers in the technology, education, real estate, and finance sectors. Well, no surprise there. Without giving details, the State Council on Thursday said it would optimize the environment for private firms and make greater effort to attract foreign investment. The private sector accounts for 60% of gross domestic product and 80% of urban employment, officials say, but there is a growing disconnect between officials calling for investment and a sweeping national security crackdown that is denting business confidence, diplomats in China say. One example was a recent anti-espionage law accompanied by raids on some foreign consultancy firms that sent waves of anxiety through the foreign business community. Well, you see, when you do shit like this, why does anybody want to do business in China if you're going to have your headquarters swatted? Just another reason why, it's just stuff like this that's just, that's just hurting China. It's just cutting your nose to spite someone's face. It's just like, like I said, all this is going to do is just piss people off and say, we don't want to do business with you. And China will just end up going backwards in time to the time of Mao Zedong, where it was broke, had no money, and you're just going to have massive famines. That's really what they're going to end up going back to, the way they're going. The Commerce Ministry met foreign businesses in July to say the law provided assurances for firms operating in China and that it should not be of concern, according to a diplomat and another source briefed on the meeting. Both declined to be identified. But the assurance only underlined a significant perception gap between the government and foreign businesses, the diplomat said. The ministry did not immediately respond to a request for comment. What people are really hearing is we're open for business, but only on our terms. Well, this is generally how the Chinese operate anyway, said Lee Smith, a trade attorney at Baker Donaldson, who previously worked at the U.S. Department of Commerce on trade policies affecting businesses with China. There may be more deep-seated reasons leaders are not rushing with measures to bolster confidence in the private sector, said Zhu Qinggang, a scholar at Stanford University Center on China's Economy and Institutions. A perennial fear of the Chinese Communist Party is that it could be overthrown if capitalism and the private economy grow strong enough, said Zhu. Well, that's good. We don't want them anyway. I don't think anybody wants them, really. Zhu said such thinking had been conspicuous under Xi, who had snuffed out dissent during his decade in power and stacked his government with loyalists after securing a precedent-breaking third term last year. A day after this week's dire data, the party's official journal published a speech from Xi in which he warned against Western capitalist economic models. The speech delivered in February made no mention of structural imbalances or how to solve them. We may all have to live with less vibrant economy for a long time," said Zhu. Oh, wow. Yeah, wow. Okay, that sounds like a bit like the globalists saying, oh, well, you will eat bugs and you will be happy. Basically, he's saying, oh, well, we're just gonna have to suffer. You're just gonna have to put up and shut up. Yeah, well, that's good for him. That's okay for him because he's just not gonna suffer much. He's gonna live quite comfortably in his little mansion in China. But everybody else is gonna have to suffer. Yeah, that's basically what he's saying. Okay, so, yep, great. Life's great under communist China. So that's all I'm taking away from that article. So. But yeah, basically that's kind of what we're seeing now. I mean, right now we're seeing a decline. We've seen a rapid decline in requests for in the international trade business. We're just seeing a lot less activity, a lot less business occurring, and I think it's for these variety of reasons that I'm reading in these articles. So. Will things turn around? At some point the worm has to turn, right? And eventually there'll be some sort of uptick. But I think right now things might continue for maybe, who knows, another couple of weeks or a couple of months before there might be any kind of uptick. But yeah, that's kind of how things are, and you can see this article just continues to confirm what I've been saying for the last how many podcasts. It's too difficult working at doing business with China, and people are leaving. So it's simple as that. Anyway, we'll leave it at that. I'll just plug our website, www.alcandrostrading.com. There you can become a member, join our forum. You can communicate with buyers and sellers, make requests, promote your offers, make new friends, network. You can also look at our services. We have a variety of different services, and on our website we've got other things there that you can check out. We're also on Facebook, Instagram, LinkedIn, WhatsApp, Telegram, Gab, and VKontakte. So we're on a lot of different social media sites. We'll leave it at that. That ends this edition of the Alcandros International Trading Podcast. This is your host, director and owner of Alcandros International Trading, Konstantin Kyle Alcandros, signing out.